Hello traders, Gary Wagner for Trending Markets, approximately 10:15 in Honolulu, 4:15 in New York on Thursday, April the 7th, 2016, and we're looking at the Dow Jones Industrial Average with probably the worst performance of at least the last couple of months in the market, trading off about 174 points, and that's well off of the lows today. Low 17,484. As you can see, we've closed at 17,541, the high 17,687 on the day. Now, of course, that would dramatically affect the Standard & Poor's, and let's go ahead and pull that up right now. Standard & Poor's off about 1.2% on the day at 2035, the low 2026, and the high 2062 on the day. There's absolutely no doubt this most recent move, today's move in the Standard & Poor's 500, Dow Jones Industrial Average, has really moved the market into a whipsaw kind of scenario, considering we absolutely see we have our resistance area sitting at about 2071. It does match this particular top here. As the market came in, we talked about the fact that we had this dark cloud cover. We received a confirming candle yesterday, or 2 days ago, excuse me. And then yesterday that was negated with this large upside move. Now, when you take a look at the move that we had yesterday, let's blow this up a little bit. To me, what was interesting was the fact that we actually exceeded the open of the prior candle, meaning this top right here. But as you can see, we opened right at that point and really drifted lower. And now we have an engulfing bearish in terms of a 2-day pattern, which is a very negative pattern. So we once again have a bearish pattern developing within the market. We had the dark cloud cover. We did get confirmation on the dark cloud cover. Of course, as I said, that was negated when we had this huge upside move yesterday, but that's followed by a tremendous downside move today with a lower low, a lower close, and really the only thing that we're missing is either a lower high or a lower open, and those are equal, as you can see. So that really bodes to the fact that we could see this market under some more pressure. Now, we haven't come close to our 200-day moving average, and that is where we would really want to take a close look at the potential for another sell-off in the market. As long as we're above this, I'm pretty comfortable with what we're looking at. But these are cues on global concerns, I believe, more than U.S. concerns. And the fact of the matter is our economy is growing. It is just not growing at the pace that many had anticipated it would or should. So traders, another thing that I find interesting, noteworthy, is the fact that we have had this disconnect between crude oil prices and U.S. equities. Of course, we had a very, very high correlation. We have the S&P on the bottom, we have crude light on the top, and they both began to move up, call it February of this year. We come in and first part of February, we make our bottom here, we make our bottom here. Market moves up substantially higher, market moves up substantially higher. You get almost identical moves in terms of up weeks and up weeks for the first part of this rally. But as we noticed last week, we have had crude oil closing down, equities markets closing up. This week, we have, at least for right now, oil was down today, but down nominally 37.47, but it is higher than the beginning of the week because it began below $36 per barrel, and the equities market's moving down. So we absolutely are looking at what I believe to be an inverse correlation between between crude oil and U.S. equities. So traders, lastly, I want to bring a new market into the mix that we haven't looked at, but I really believe we could see some substantial opportunities over the next couple of weeks, and I'm talking about the Japanese yen. We are looking at a weekly chart right now of the Japanese yen. Take a look at the size of the drop that we have seen this week, currently trading 108.30, off about 1 1/3% on the day. This is the weekly chart. Although off of the lows at 107.50, the market is still trading dramatically under pressure, not only on the day, but on the week. And traders, of course, when we convert this to a daily chart, you can really see the kind of pressure that we have seen, and more importantly, see how that pressure has accelerated most recently in the yen. Look at today's drop, dynamic drop. So that's going to be something we will want to take a look at next next week. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.